India's gold market. A growing appetite for the yellow metal. India, renowned for its rich cultural heritage and traditional affinity for gold, has witnessed a significant expansion in its gold market. This surge in demand is driven by a mix of economic growth, cultural significance, and evolving investment preferences, making India the second largest consumer of gold in the world, after China. Cultural significance and investment. Gold holds a deep-rooted place in Indian culture, serving as a symbol of wealth, prosperity, and tradition for thousands of years. It plays a pivotal role in religious rituals, marriages, and festivals like Diwali and Akshaya Tritiya. According to estimates, Indian households hold over 25,000 tons of gold, largely in the form of jewelry. Beyond its cultural significance, gold has become a reliable store of value and a hedge against economic instability, inflation, and currency devaluation. In times of financial uncertainty, Indians often turn to gold as a safe haven asset, making it a key part of household savings and investment strategies. Physical and financial holdings. The expansion of India's gold market is evident in both physical and financial holdings, offering flexibility in how consumers invest in this precious metal. Physical gold. Traditional forms of gold ownership, such as jewelry, coins, and bars, remain dominant. Jewelry, in particular, holds a dual role as both an ornamental item and a form of financial security. Rural India, which accounts for a large portion of the population, still leans heavily towards buying gold in its physical form due to trust, tangibility, and its cultural value. Financial gold. However, in recent years, India has seen a shift towards financial gold instruments, including gold ETFs, exchange-traded funds, sovereign gold bonds, SGBs, and gold mutual funds. These instruments provide a more regulated and liquid way of investing in gold, attracting urban investors and younger generations who prefer digital investments over holding physical assets. As of 2023, the government's sovereign gold bonds have gained traction as an alternative, offering interest income along with exposure to gold prices. Factors driving growth. Several key factors contribute to the rising demand for gold in India. Economic growth. India's GDP has been growing at a rapid pace, which has led to rising disposable incomes, particularly in urban areas. As a result, more consumers can afford to buy gold for both personal and investment purposes. Rising middle class. The emergence of a large middle-class population has boosted demand for luxury goods, and gold remains a top choice for investments due to its historical association with wealth. By 2025, India is expected to have over 500 million middle-class consumers, driving higher consumption of gold. Remittances. India receives over $80 billion in annual remittances from expatriates, particularly from the Middle East, and a significant portion of these funds is funneled into gold purchases, either as gifts or long-term investments. Government policies. Government initiatives like the Gold Monetization Scheme and sovereign gold bonds aim to reduce the country's reliance on gold imports while encouraging investment in gold through formal channels. These schemes have helped diversify gold investments and ease the liquidity of gold assets. Challenges and outlook. While India's gold market continues to expand, it faces several challenges. Import restrictions. India imports most of its gold, making it vulnerable to global price fluctuations. To control the current account deficit, the government has imposed restrictions on gold imports, including high customs duties, which has affected overall demand. Increased smuggling activities have been reported due to these restrictions. Price volatility. Global gold prices, influenced by factors such as geopolitical tensions, inflation, and changes in interest rates, create uncertainty for domestic buyers. This volatility can sometimes deter investments, especially when gold prices surge too quickly. Competition from other assets. Real estate and stock markets in India have seen impressive growth, offering investors attractive returns. As a result, younger generations and urban investors are increasingly diversifying away from gold into equities, cryptocurrencies, and other asset classes. Despite these challenges, the long-term outlook for India's gold market remains promising. As India's GDP continues to grow and the purchasing power of its citizens rises, the cultural and economic significance of gold is expected to sustain demand. The Indian government is also likely to continue refining its policies to encourage formal investment channels for gold, thereby creating a more balanced and robust gold market in the coming years. India's gold market is at a pivotal point, balancing tradition with modern investment trends. The combination of cultural affinity, economic growth, and the formalization of gold investments is poised to keep the yellow metal shining bright in India's financial landscape. With technological advancements such as digital gold platforms and mobile apps making gold more accessible to retail investors, India's gold market is set for continued evolution and growth. India's enduring love for gold, rooted in its rich cultural heritage, continues to shape the nation's economy and investment landscape. As the market evolves, blending traditional values with modern financial instruments, gold remains a symbol of stability, wealth, and security. Despite challenges like import restrictions and competition from other assets, the outlook for India's gold market is positive. With growing disposable incomes, increasing middle-class wealth, and innovative investment platforms, the demand for gold is expected to rise steadily. As India's economy advances, the golden legacy of this precious metal will continue to shine brightly. Thanks for watching. Thank you for joining me today to explore India's gold market and its fascinating journey. If you found this video helpful or insightful, don't forget to like, share, and subscribe to the channel for more content on finance, economics, and investing trends. Make sure to hit the notification bell so you never miss out on our latest videos. Feel free to leave your thoughts or questions in the comments below. I'd love to hear from you. Until next time, keep investing smartly and stay informed.